So welcome to this special Zoom section. A market outlook session. So today is going to be special because we'll have a lot of time. So first of all, we are going to do the market outlook like we usually do every Sunday. Then if we have enough time on all that, then we'll do a training. Okay, sorry for the interruption. I need to pause in. JD wants to destroy my setup. Okay, so let's look at the outlook for the week. So as always, we will go straight. We go straight to Forex Factory. Abdulmalik. Abdulmalik, are you hearing us or not? Is it that you cannot hear us? You cannot. Can you hear me? You have to pick your mic. I'm not sure if your mic is picked. Let me see. Your mic is not picked, Abdulmalik. Can someone please send him a message on how to pick his mic so that he can hear? He's not hearing us. Okay, I think he's doing that right now. So first, we're going to look at the economic calendar for the week. So let's see what we are expecting for the week. Now start the market will open up this evening by 10 in 2 hours time, and we'll run till Friday. So from the economic calendar, we are expecting somehow a quiet Monday. Monday is going to be very quiet. The only news we have is this orange medium part news by 6:01 p.m. That's almost at the end of the day. So there is no activity. So the market is going to be pretty quiet tomorrow. So activity is going to pick up from gradually on Tuesday for the GBP, especially when we are going to have this when we are going to have the element count change. Red folder means it's going to be a high impact news. It's going to affect whatever currency that the news will be released for. So by 7 a.m. on Tuesday, we expect this high impact news for the GBP. That will be followed by the average earnings index that will be released same time, but it's a orange color. So it's medium impact. The euro will follow by 10 a.m. and then by 1:30 p.m. in Nigeria, we're going to have the CPI. The CPI is usually very volatile, so you expect some activity. You expect you have expect activity for the USD by 1:30 p.m. on Tuesday. Then on Wednesday, okay, the GBP by 3 p.m. 3 p.m. the GBP will the GBP will follow by 3 p.m. where the Bank of England Governor Bali is going to speak. The Bank of England Governor is going to speak by 3 p.m. Then on Wednesday, we'll still have another activity for the GBP by 7 a.m. We are going to have the GDP. It's a red folder news. So when it's red folder, it's going to be very volatile, very, very volatile. Then 1:30 p.m., it will be the USA. We have the core PPI that will be followed. Then Wednesday, we are going to have the FOMC, the economic projection that will be followed by the FOMC statement, the FOMC rates, whoa, and then the FOMC press conference by 7 p.m. and 7:30. So look out for the USD pairs, especially on Wednesday. On Wednesday. Okay, please stay muted. Jaka, please, Jaka Hysen, please mute yourself so I don't interrupt the class. Thank you. All right. Okay, so FOMC on Wednesday is going to be very volatile because of we're going to have the rate and all of that. Then on Thursday it will be the AUD by 2:30 a.m. So expectedly we'll be sleeping by that time. So if you don't want to be awake, you don't want to have any trades on any trades that has the AUD. You don't want to carry it overnight if you're not going to be active by that time, because you might just wake up and there is a violent storm because of this news that will be released by 2:30 a.m. Then on same Thursday, 1:15 p.m., the euro, we're going to have the main refinancing rate and the monetary policy statement for the euro. The euro, so we expect that high impact. Then 1:30 to be the USD. Here we are going to have the core retail sales and then the Empire State Manufacturing Index and then the retail sale by 1:30. Red folder, very volatile. So why are we looking at this? So that these news events actually controls the market. They are because they are actually the things that moves the market. So we don't want to be on a trade. You don't want to be on a trade when they are released. So that's why we are looking at the events for the week. It will, okay, by 1:45 p.m. That's in Nigeria. The euro again will have the ECB press conference, and the Thursday is going to conclude with the USD. but this time is an orange color medium impact news. No much, just medium impact. On Friday, we are going to conclude the week with the JPY. Then we'll have the monetary policy statement. So the JPYs are going to be busy. It will be followed. It will be followed with the Bank of Japan policy rate, medium impact. For the fact that it is rate, we might expect it to do some damage in the market. That will be followed by the Bank of Japan press conference, which in this case is red folder. So the fact that they are lined up together, we have two red folder, one orange, to be released at the same time. So we expect the yen pairs to react instinctively when these when this news will be released. Then by 12:45 p.m., the USD, we have the FOMC member Walter speaking. By 3 p.m., it will be the USD again with a red folder news. So this is how the week is going to work. The economic calendar for the week is going to run. So it's a busy week, especially on Wednesday. On Wednesday, beginning Tuesday, begin to see some activity involving the major pairs, the USD. So we expect that. But on Wednesday, we really want to be careful on Wednesday. Because of there will be, although because of this funds rate, we may not really see. Traders will be somehow, some aspects skeptical. They do not know what the FOMC, the rate, the interest rate that the FOMC is going to come up with. So they will be careful, just monitoring that. You want to really be careful on that Wednesday. All right, so let's now go straight to the chart and see what the calendar has for us. Let's now go to the chart and see what that also has for us. So as we always do, we are going to begin with the dollar. We're going to begin with the dollar. The dollar last week, was actually looking at this level here that was earmarked. So we saw there was a kind of difficulty going up. There was some difficulty going up, making some highs. So we are actually inside this other block here. And we see when the market traded into that other block, there was a kind of reaction. In as much as I'm actually expecting it to. I'm actually looking at this level, expecting the dollar to come into this level here. Because the reason being that, one, it tried respecting the other block here, but I am not too. It's too deep. It's too deep into that other block. It's too deep into that. So because of that, yeah, the Thursday's this Thursday's daily candle actually closed below the 50 level, closed below the 50 level here. So that somehow invalidated this other block. So as a result, I'm expecting it to hit deeper. But normally, because if we go into the lower time frame, like the 4-hour, we see that normally because we had a kind of an impulsive move an impulsive move like this. So naturally, we'll expect that there's going to be a pullback. So I want to see the dollar. I want to see the dollar close up the gaps. Because normally the way the market moves, when the market doesn't, shouldn't have the market. So going into the new week, I want to see the dollar that's already started the move. This kind of I'm looking at this as a pullback. So I want to see it close up this gap that it created and then sell off. Sell off, clear up all the liquidity that is here. That's what I want to see from the dollar going into the new week. Okay, so if that's how the dollar is going to, I will expect the dollar to react. So the dollar moves just opposite of, or does opposite of what the Euro USD does. So we can see that why the dollar was if you look at this, we see that it is just opposite of this. Is the opposite of this. So this one is the dollar came down, made a pullback, and then dropped, and then gradually it's trying to also make a pullback. So you see the Euro USD. The Euro USD is pushed up, pulled back, and then so in view of that, I want to see this complete drop, and I want to see this other block here serve as the support, and then you can make highs. As clear or as see it go as high as that. So please mute your mic. If you come in, please mute your mic. David, please mute your mic. Thank you. So like I mentioned, if you're able to get the direction of what the dollar is going to do, so it becomes very easy to actually trade the Euro USD because it is just the opposite. If the dollar is selling, you expect the Euro USD to be buying. So it's vice versa. So the GBP USD moves almost the same as the Euro USD. Normally, when the dollar is going the opposite direction, because they have the dollar as the counter currency, so they do opposite of what the dollar does. So we can see that the GBP USD was also made this move, came down, and then push. So please, please mute your mic, Is that David? Okay, let me help him and move his mic. You are welcome. So the same thing, I want to see it, make a return and sell off. Expect this pullback, and then expect it to go to the upside. So those who use trend line can expect something like this when the market wants to gradually begin to trend to the upside. So you see that. So you want to look out for that move. When we had an impulsive move, we expect a pullback, or we will get a continuation to the upside. So it's that simple. Okay, so our other favorite pair, let's see what is the USD Canadian dollar. The USD Canadian dollar, very clean setup. We've had this move. Last week I was actually, you could see the market was inside this consolidation. That's why I bought it. But then, rather than give us our expected pullback, so we had a move like this. Normally we expect that we should have a pullback. But then the breakout actually came from the breakout. Instead of going to the upside, still continued going up. So we can actually form the channel. So if I remove this now, what you'll be seeing here now, what you'll be seeing is a channel, and this is a descending channel. It's actually an indication. Normally, the market moves impulse, correction, or pullback, and then a continuation. That's how it moves. So, but when the market moves impulse, and instead of giving us our pullback, it begins to form this. We say this is a descending channel. and is an indication that the market is going to actually go to the opposite side, that we're going to have a reversal. So that's what we are seeing here. That's what we are seeing here. So, but when is it going to do that? Already the liquidity that are above these levels here have been tapped out. We want to see it completely tapped out. So I'm not convinced yet, in as much as I'm expecting that we should have this pull to the upside. So we just need to be patient, get it to completely clear out whatever is on the downside. So even if this has been marginally taken out, we still want to know that there are the levels here have not been taken out. The levels here have not been taken out. So we want it to gradually take that out also, so that we know that there is nothing that is actually drawing it. Then we can still see there is still liquidity lying below these levels. So we will not be surprised if this continues, especially with what we are expecting from the dollar, because this is USD card. USD is the base. Y card is the counter. So if USD is weak, during the week, as we are expecting from our analysis, then we expect the card to continue dragging it to the downside and then eventually clear out all the liquidity that we have on the downside here. But then what we know is that we are expecting it to eventually break out from this channel and then begin to give us a pullback, because we've had the market going to the downside for a considerable number of time. So you trade what you see and not what you think. Is what you see that you actually trade, not what you think. So what we are thinking is that we should have a pullback, but the market may not be ready. That's why we are now looking at for all the pieces that will make us to be patient. And they are the fact that we still have liquidity lying below here and this level here. So when those liquidity have been gradually taken out, then there will be no reason again for the market to continue coming to the downside. So it will now begin to make that move to the upside to eventually clear out and fill up all the gaps that we have created at these levels. So that's for CAD. So for CAD, I still expect CAD to come lower, clear out all the levels there before we have this move. Have this move here. All right. The meeting is going to time out in 6 minutes. So in case when you are kicked out, please just rejoin with the same link. Is that okay? Is that clear? Just rejoin with the same link. Is that clear?
Yes.
Yes.
All right. So in 6 minutes, we expect that
Yes.
time out. All right.
Yes.
Okay.
Yes, sir. Yes, sir.
All right. So that's what we are expecting from that. So we're expecting from that. All right. I think another of our pairs that we usually don't miss out looking at is the USD JPY. The USD JPY is really not I think what is actually presenting is not anything attractive to me. It's not anything attractive to me. And when anything is not attractive to me, I don't force myself into looking at it. So let's see what good is offering us. As for our good lovers, I still have this level here that I have earmarked for a very long time. It's actually a daily level. It's daily. So I expect it to be huge. expect it to be filled. But at this point, I think I want to recognize the fact that and I have something that we want to attract the market to these levels. There's liquidity here. Liquidity simply means money. So as long as there is money, that's where the market is going to go to. So if I'm to trade gold, it hasn't really presented anything of any concrete stuff, except maybe let me see if we look at this as a channel. Okay, that's a channel. Still not convincing. But then we also have to recognize the fact that we are expecting a weak USD. We're expecting a weak USD, but at the same time, gold has not really given us any sign that it actually wants to go to the upside and fill up these gaps that we have identified here. So because of that, and the fact that we now have a liquidity on the downside here, so I will want it to completely. This is what I would have. This is what I want to see from gold. I want to see it go down and then come to this level here. Then I will use this point here as a point of reference where it eventually goes up and what we have there. All right. So in 2 minutes, we'll be timed out so we can just rejoin. Rejoin so that we can look at your best and possibly entertain some questions. So this is what I want to see from. This is what I want to see from gold. Okay, so I know Sunday loves oil. So probably when we rejoin, then I can look at oil for you. This is NZD USD. NZD USD is actually following what I expected it to do. For now, what I want to see is that I want to see it pull back into this other block here, and then continue. They are all in alignment. So this is what's so if you had for someone, this was the best point to actually enter the trade as indicated here. It was the best point when we had this first push out. This is the channel. There was a breakout of that channel. Let's step down to a lower time frame so that you see the setup very clean. You see, this is a breakout of the channel when the market was going down. We've already had our impulse. We're expecting a pull. That didn't happen. The market started going down little by little, form the channel. So at that point, you don't need to. We know we are expecting the pull, but you don't know when it's going to come, but you just know that it will come. But then this was the biggest indication that it gave. Pulled out, broke out of the channel. Is that when you start buying? No, pulled. We expect the pullback. This is now an impulse. So this is a pullback. Pulled back into that other block that was shown in the daily.